Okay, so savings bond interest exclusion. So Series EE bonds are generally like for education. These are federal treasury bonds. You know, the ones that grandma gave you when you were 2 years old or when you were first born and you got this little savings bond. Maybe they didn't do that anymore. They did that a lot when I was a kid. Like it was something that grandparents just loved to do. But these are particular types of bonds, and they're earning, how they earn interest is a little bit different between the two. Series I bonds can also be used for education. Series I bonds are kind of cool because they are indexed for inflation, which for a long time didn't really give you a whole lot of benefit. However, over the last few years, like I have some Series I bonds that I bought when I was back in like 2020. They're actually getting close to the end of their life. And this, like 2019, not 2019, but like 2021, 2022, the interest rate on those was like 15%. It was annual interest rate because they were indexed for inflation, and I happened to buy them at a time when the core rate on it was also pretty good. Not a lot, but it's just to kind of give you an example. So they're indexed for inflation, but they also have like a core interest rate. I think though that the core interest rate right now is really low. Most of the interest that they're earning is just inflation, based on inflation, which is coming down, so they're probably not going to be quite as attractive here in the near future unless we get into more inflation again. But they can be used if the proceeds, so as I talked about before, the interest that's earned on these can be, you can pay the tax on the interest as you go if you want, even though you haven't actually received the interest income yet, or you can wait until the end of whenever you redeem the bond or cash in the bond, you can pay the tax on the interest at that point. Well, if you meet certain criteria and you cash it in and you use the proceeds for qualified higher education expenses, then the interest is not taxable. So it's one of those things that can be used for higher education. Now, there are limits on it. So the bonds cannot have been purchased, cannot have been purchased after, not received, what does it say? Let's see, the bonds must have been purchased after 1989. Nobody owns bonds that were purchased before 1989 anyway, because they're no longer earning any interest. By an individual that was at least 24 years old at the time of the purchase, who is the sole owner of the bond, or a joint owner with a spouse. So it can't be a bond that, you know, your grandma's name is on it and so is yours. Qualified higher education expenses are tuition and fees at a qualified educational institution. The taxpayer must first reduce qualified expenses by any tax-exempt scholarships, educational assistance allowances, and benefits under a qualified state tuition program. So this is one of those areas where if you had a 529 and you're using the funds for higher education, but you've got some saving bonds too, it might kick you out of being able to exclude the interest income from the savings bonds. But you've got all these programs that can be used in conjunction to kind of help reduce the costs and hopefully not have to pay taxes. It also can't be used in determining any credits that the student may be eligible for. So for example, if you have $10,000 in bonds, you know, $5,000 of it is accrued interest, and you have $10,000 of educational expenses, you use those bonds to pay for the educational expenses. Well, you don't have any expenses left to count toward any credits that you may be qualified for. So you wouldn't get the American Opportunity Credit if you otherwise qualified for it, or the Lifetime Learning Credit if you otherwise qualified for it, that sort of thing. You can't double up, right? No double dipping. They don't like double dipping. Also, married filing separately, you cannot get this exclusion. So married individuals have to file a joint return in the year of the exclusion. There is a phase out range though, dependent upon income. Where is it here? So, savings bond interest that is exempt is limited if the modified adjusted gross income, so this is another area of modified adjusted gross income, just like that provisional income, but let me see if they got the definition listed here somewhere. So, adjusted gross income plus deduction for student loan interest, deduction for tuition and fees, savings bond interest, foreign income, adoption assistance. So it doesn't include anything regarding Social Security. So that's why I prefer to use that term, even though that is a modified adjusted gross income for provisional income. There are a bunch of different definitions of modified adjusted gross income. In this case, this is the definition of modified adjusted gross income. So you would make all of these adjustments, and then what you do is you take your modified adjusted gross income minus the limitation amount. So it is limited to, where is it here? If you're married filing jointly, your AGI, well, your modified AGI cannot exceed $137,800 or $91,850 on for any other filing statuses. And then you divide that amount by the phase out range. So if you had, what this means is, let me see if I can do this. So if you're married filing jointly, and you have excludable interest income because you used it for higher education of $10,000. Your modified adjusted gross income is, modified 137, let's say it's 150. You're not going to get to take all of that $10,000. You're not going to get to exclude all of that from your income. This is the calculation for it. So we're going to take the 10,000 times modified adjusted gross income, which was 150,000. And I want to go through this, not because you have any questions about this. I don't think you have any calculations on this in this chapter, but you are going to see these phase outs several times because a lot of credits use phase outs. A lot of different deductions use phase outs, and the calculation is very similar to this. Okay, so modified adjusted gross income minus the lower limitation, 137,800, divided by, for married filing jointly, $30,000. That $30,000, where that comes from? So this is the bottom of our phase out range. Once your income reaches this, you're starting to get into the phase out range. The top of the phase out range is 167,800, and this is only for married filing jointly, which is a $30,000 phase out range. Once your income, your modified adjusted gross income exceeds this amount, you're not going to get any exclusion. But when you're between those two amounts, you're going to get some exclusion, but not all of it. When you're under 137,800, you're going to be able to exclude all of it. All right, so this is just a calculation to determine how much of it do you get to exclude. So what is this? Can somebody do this math for me? I should bring an extra calculator with me so I can be up here. So 150 minus 137,800 is that 12,200? 12,200 divided by 30,000.
I got 0.4066, and then times 10,000, 4,000, and 66.6.
4067. That's our amount that we can exclude. So we can't exclude the whole 10,000. We can only exclude the top one. That's $sign 4,067. Okay. This is, like I said, phase out ranges are very common. We're going to be doing a lot of calculations with phase out ranges. So this gives you an example of how those are done. You know, you've got your bottom number, you've got your, and again, this is just verified and jointly. There's other, the phase out range for everybody else is between 106,850 and 91,850. And so your denominator here is 15,000 instead, because that's the range. Okay, that bottom number is always going to be whatever that range is, that phase out range. Okay. Do I want to say anything else about this? Not really. I'm not going to go into those other things. Any questions about the student loan, not student loan, the student savings bond interest used for educational purposes? And it's only higher ed. It doesn't, like, you can't use it for private school or something like that. Okay. Questions? All right. That's chapter 3. Look at you. We've got, let's see, that's the first unit. Oh, I did want to mention, so I don't know how I have been having an experience, either I am losing my mind, which is possible, or the dates keep changing on some of my assignments.
Yeah. They were, the chapter 3, which originally due on like the 26th, and then it got bumped up to the 19th.
It's always been due the 19th. I don't know how it got to be the 26th. I switched it back to what it was supposed to be, which is the 19th. Still a week from now. So you still got your usual week for the assignments. But I don't know, I mean, I may have made a mistake. I did it in the other class too, my online class. But I've noticed other dates, like in my payroll class as well. So like I said, I don't know if I'm losing my mind, entirely possible, or something, there's some little glitch going on. Like my payroll class, I had something, like all of a sudden, I started everything on the day that classes started, and then all of a sudden everything got shifted back one day. And I had to go in and change all my due dates. Anyway, chapter 3 homework is due a week from today. So like I said, you've got a week for each chapter, with the exception of chapter 6, where you have 2 weeks. Okay, so because we've got a lot to go through, and the only way to stay on track is to stay on track. What else did I want to say? So this is the end of Unit 1. Your homework for Chapter 3 with the Tax Act problem as well is due next Thursday, the 19th. The Unit 1 exam isn't due until the 26th, which is the same time. So on the 26th, you actually you got the exam for Unit 1 that's due, and you'll have your Chapter 4 homework due. So this week you're okay, but next week you're gonna have an exam on top of all the other stuff. Okay, does that make sense? All right, but remember, for the exam, you can use your book, you can use your notes, whatever materials that you need to assist you, you can use. It is timed, 90 minutes, but that should be plenty of time. I think it's like 30 questions? I can't remember exactly. I shouldn't say anything because I can't remember. But it's chapter 1, 2, and 3. I think, did I put a study guide up or something for it? If I didn't, I'll try to remember to do that, to give you an idea of what to prepare for. I guess I can stop this.